I've never seen a market like this. Never, ever. I mean, let's go back to the pandemic. Premiums on junk, we were paying $9 over spot for 4 years. Anyone that would sell us as much as they would sell us, we would pay $9 over spot. I've never seen a market like this, and it's not just junk silver, although that's been hit relatively hard on the buy side. It's all of the items with the exception maybe of Silver Eagles. I've never seen anything like it. Let's talk about it a little bit. In an effort, I think, by the CME group to, which is the COMEX, to knock the speculators off their perch, they raised margins significantly. So normally we'll have 2 or 3 million ounces of silver in our warehouse, and we will hedge it ounce for ounce so that we're market neutral. We'll sell the equivalent of what we have in our warehouse on paper. So one goes up, one goes down. We've talked about this a lot. So you're market neutral with your inventory. If a week or two before Christmas, it was about $16,000 to hedge 5,000 ounce contracts, somewhere in that neighborhood. Now it's about $50,000. I saw that article. It said almost 80% said gold will be a higher share of reserves 5 years from now, all the central banks. And, you know, to me, this isn't gold hype from the World Gold Council. This is the fact that the world is hedging against the dollar system. And I think that is what is happening. When you look at you look at the amount, there was an interesting article I read that talked about energy and infrastructure, where China every year is building onto their energy infrastructure more so than our entire grid, which is 50, 60, 70 years old, whatever, that is in a state of disrepair. The amount of energy you needed to build electricity and to build it that will work for AI and you know, the needs of a globalized, or of a country that is digital, that is using AI, that is looking at a system that is broken and in disrepair. You know, if we want to reshore manufacturing, if we want to be competitive, we need to start also by fixing the power supply and upgrading it. There is no way of doing that, but, you know, where's the money come from, right? So we're already broken, insolvent. So we're going to print more money. Again, all of the things we're looking at going forward speak to the decline of the value of the US dollar. That's the bottom line as far as I'm concerned. The US dollar is in very, very big trouble ultimately, because we don't have enough money to do things like build out the grid, to build out our infrastructure, when China is doing that nonstop with their trade surplus, and we're not. And China has the energy advantage and more power and a newer grid, and we don't. And I think we're losing. We're in a competition that we can't afford to lose by rebuilding the grid, reshoring industry, keeping up with the AI tech costs, involved with all this, cost trillions. And where's it going to come from? It's going to come from abandoning the reserve status, as we've talked about, as I've screamed. Now, I might be the only one saying this over and over and over again, that I really believe that we are going to softly default on the reserve status in order to reshore things. And I've gone into that thesis enough. I don't need to go into it again. But I think the bottom line with all of this stuff is stop looking at the noise, at the daily moves. Look at the big picture. The big picture is that the dollar is going to be what is going to be sacrificed in order to compete with the rest of the world, whether it be to reshore, whether it be to rebuild the grid, whether it be to keep up with AI, whether it be to bring back manufacturing. And so gold and silver will be the benefactor of this. And when you see the amount of huge money over the last 8, 16, 17 months that has stood for delivery, that's all you need to see. They're positioning, and they're continuing to do so. And if it's that important for the governments to do so, they won't make it easy for the rest of us. The volatility, the counterintuitive rhetoric, all of this stuff, that's all part of what they've done forever. And as the stakes get higher, so too will the volatility. And the ability for those to hang on will be less and less and less. Don't let go. Don't sell your metal. That's all I can tell you, is that this is not over, not even close. This is the volatility one would expect in a shift like this. And big money, big stakes, big volatility. I've never seen a market like this. Never, ever. I mean, let's go back to the pandemic. Premiums on junk, we were paying $9 over spot for 4 years. Anyone that would sell us as much as they would sell us, we would pay $9 over spot. I've never seen a market like this, and it's not just junk silver, although that's been hit relatively hard on the buy side. It's all of the items with the exception maybe of Silver Eagles. I've never seen anything like it. Let's talk about it a little bit. In an effort, I think, by the CME group to, which is the COMEX, to knock the speculators off their perch, they raised margins significantly. So normally we'll have 2 or 3 million ounces of silver in our warehouse, and we will hedge it ounce for ounce so that we're market neutral. We'll sell the equivalent of what we have in our warehouse on paper. So one goes up, one goes down. We've talked about this a lot. So you're market neutral with your inventory. If a week or two before Christmas, it was about $16,000 to hedge 5,000 ounce contract, somewhere in that neighborhood. Now it's about $50,000 to hedge a 5,000 ounce contract. And gold is about 40-some thousand dollars to hedge a 100 ounce contract. You have to have that in your margin account. And as long as the market doesn't move against you, it stays there. Well, you know, if you're not a big company with 50 million or more that you can park in a margin account, you're not having a big inventory, first and foremost. The cost of running this business because of things like that has become exponentially higher with insurance. Insurance say, well, metals have gone way up, and you know, how are you going to protect that and insure that within the vault and all, coinciding with the stupid margin increases to the nth degree to knock the speculators up. So you are a refiner. So, you know, companies like mine have big enough bankrolls to buy this stuff and stockpile and hang on to it, right? And hedge it. The cost of hedging just went way up. But if you're a mid-sized company or a small-sized company and you don't hedge, you offload it right away. Well, with the volatility we've seen in the market where, you know, $1 moves used to be a lot. Now we're seeing huge moves. You have to be way back of spot if you're not hedging it, because you could take in $100,000 worth of stuff and it moves $10 an ounce in the next day and you're way down. Well, if you're taking large amounts in, you go out of business. So the small mid-sized companies who aren't hedging, well, they have to be way back of spot because of this environment. Normally they would give it to the refiner and get spot, or, you know, a hair under, whatever, you know, but now the refiners won't take it because the refiners have to hedge theirs. So, you know, if the refiners take in $50 million worth of product, they'll hedge $50 million worth of product on COMEX, right? Market neutral. Well, it takes time to break down the doré, to break down the junk silver, melt it down into pure silver, into shot, and then refine it into bars and rounds, and or the, you know, the flatware where the knives are, the blade is stainless steel, the handle is plaster, a little bit of sterling silver around the handle. It takes time to break that down, snap off the blade and break the silver off the handle, and all. It's labor intensive and it takes time. Well, for 2 months, the price of silver was going up so fast and the margin requirements so fast, all the refiners got margin called. And they're like, we can't do this. We take in any more, we're going to go out of business. We're getting margin called on our short position to offset our inventory, but we can't even melt the stuff down yet. We're getting margin called because of it. The entire industry has been gummed up because of margin increases in particular. And it has reverberated through the entire industry, largely because the refiners, which would provide a great source of liquidity to the industry, aren't anymore. They're not taking any business. And so when you look at the increase in costs on those that use margin and hedge rather, or the risk for those that don't, it's created an environment that no one has ever seen before. Now, I don't think this will last. I just think that this is an environment that it's kind of an outlier. I would not sell junk silver right now. It's the best value, period. Buy it at spot. It is the best value I've ever seen. And remember, in a period of great stress, 2020 through 2024, we would have paid you $9 to $10 over spot for any amount of junk silver you would sell. So it was the best performing asset in silver other than Silver Eagles for 4 years. It's just the fluidity and craziness of the times that we live in, which, after what we've lived through the last 4 or 5 years, nothing should surprise you anymore. This is not a new rule. I think this is an exception to an old rule. And hang tight. This will all, once it all clears through the system, once the system ungums up, I think we'll be back to normal premiums on all of this stuff, junk silver included. Who knows? I mean, it should have already changed, to be honest with you. It should have. And look, if you want to know the truth, the only way that you ever really get ahead in things is to buy things that are cheap and undervalued when they're on sale. You don't go into Nordstrom's to buy your kids a new wardrobe for school and say, gosh darn it, everything's on sale. And that's what we're saying here. This stuff is on sale. Look, I remember 2007, 8, and 9 when premiums on that stuff were 70, 80, 90% or higher, even from circulated grades, over $1,000 spot price. I flew all around America for 2 years and told people who had bought nothing but numismatics from us, sell us your numismatics and go into bullion. I would call a guy like you and say, Dunnigan, I sold you 1,000 MS-62 Liberties over the last 10 years. I'm flying out to your house and you can't say, no, I'm bringing 1,800 Gold Eagles with me. And I did that for 2 years. It was the best trade I ever did for my clients ever. I became Diamond Elite on Delta, flew everywhere, and I would exchange these. There were auction galleries bidding massive premiums for pre-33 stuff. Look, when you see the largest inflows in the history of the stock market ever right now into equities, at the same time you're seeing institutional investors leave quietly, and the big money, the Buffetts and those Bezos and the Zuckerbergs quietly leave and start to pare down exposure. And at the same time, who's standing for delivery for all of the metal on COMEX? It tells you that we're seeing a shift that the public hasn't taken part in yet. And it won't take very much interest from the public to push these premiums and all this stuff parabolic again. We're not there yet. So I guess it's one of these deals that, no one complains when it's the opposite. And when things are on sale, people get upset. I get it. But this is way above Miles Franklin's price grade. These are the market makers who are saying this is the premiums that we see right now, which in both cases, whether it be pre-33 or the pre-65 silver, I've never seen in 36 years. Never. And if I look at what has made me successful in terms of individual trades, it's always been identification and exploitation of price anomalies. You want to exploit a price anomaly, buy pre-33 gold, buy junk silver, you're exploiting a price anomaly. Now, does that mean that, what's the old adage? Markets can stay irrational longer than you can stay solvent. It's true here too. But I'll tell you, in 36 years, in almost 15 billion in sales, I have never, and I mean never, seen this with Numis and this with junk silver. So for me, if I'm looking for the very best value, that's where it is. I don't make any statements about, yes, it's gonna clear up in 6 weeks. I don't know when it will, but history says that the further away you get from established averages, the greater the magneticism that regresses you to the mean, and that's where we are. These are way outside of normal. And on the low side, where the reason people don't buy numismatics, we've always been told the premiums are too high. Well, now there's no premium, so why bitch about it? Yeah, if you own it, sure, you're upset because, well, it's not performing like you think it should. Well, you have two choices. Switch to gold bullion if you want, or hold on and know you have a massively undervalued asset in terms of its premium compared to where it's been literally my entire career, which goes back to 1989, 1990. I've never seen it. Is it an outlier? I think so. Is it a new reality? I doubt it. But who knows anything anymore in this crazy world we live in? Why fight it? If you're looking for the best value, that's where it is. If you're looking for the ability to gain upside potential when the public wakes up, that's where it is. Because you're already seeing it in American Eagle products, so why wouldn't it happen there? I think it